news, we talk about economy, we talk about business, we talk about politics. What are your clients, your institutional clients, but your big corporate investment clients are most worried about?
So first of all, happy to be here. There's an unbelievable JPMorgan conference and with some of the best investors in the world, some of the best speakers in the world. The business and economy go hand in hand. So if you actually look at the economic indicators around the world, America's doing okay, China's doing at 6% plus, Europe is doing better than people thought, Japan is doing better than people thought. And so the economic indicators are pretty good. And I think business in the U.S. is growing confidence because of policies, if we have right tax policy, infrastructure policy. So, the investment world is always a little confused about what it all means, of course. So, and the biggest concerns are not business or economy, but I'll say policy. And so it would be more around trade, are we going to get that right, or obviously North Korea and things like that.
Are you confused about what this all means? What is President Trump and his administration actually going to do for the U.S. economy?
Yeah. I think here's what's very positive, okay? Look at the policy, forget the tweets. Look at the people on the ground. They're top professionals, both in the military, defense, Secretary of State, Secretary of Treasury, Gary Cohn, National Economic Advisor. Serious people with deep knowledge and deep experience. And their mission is to have a growth agenda. And that agenda is reducing corporate taxes, starting to build better infrastructure, which we desperately need, reducing some of the regulatory regime, which has probably held back growth. I think a growth agenda is good for all Americans. Middle class, low paid, job creation. So, and what you saw recently is business conferences have jumped a lot, but more than it's ever jumped before in our life, probably because of the pro-growth agenda.
Do you have any doubt that he'll be able to follow through?
Look, I've been watching politics like you for years. The Republicans have the House, they have the Senate, they have 30 plus of the governorships. They have a better chance of getting those things done. I don't know the exact timetable, and obviously the sausage has to be made. So the euphoria from the positive growth and pro-business is there, but now they have to do this stuff. And so I'm pretty high confidence to get it done. Remember, the Democrats acknowledge that corporate tax is too high and it's in America. Everyone wants good infrastructure. The reason the Republicans didn't like it is because we waste money, not because they are against bridges, tunnels, roads. And most people acknowledge now that it's time to look at the regulatory regime and kind of relook at it and recalibrate it and make sure that it's both conducive to growth and doesn't hurt small business formation and things like that.
Jamie Dimon, what is the one question that actually you get asked the most by your big clients? Is it on Trump? Or is it on China?
How come you won't take our deposits? Literally, I just had that. It's like, how come the cost of repo is so high? So these are investing clients, and we provide a lot of research and execution. But it's mostly around the new administration. That's traditional. I mean, you have a change of leadership. People are going to be both concerned, interested, et cetera. And around the world, it's Trump. I mean, mostly about Trump. So, but today at lunch, I went around the table and said, what do you all want to talk about at lunch? And we didn't get to Trump until the 7th question.
So
and that hasn't happened since he's been made president.
What was the first? The repo question?
The first was the clash of civilization, a lot about regulatory, inclusive capitalism and things like that.
Okay, and this is because they're concerned that it will actually affect their investments, or because it's more intellectuals trying to be smarter about how they need to invest in the future?
I think they're thinking more long term.
Right.
So, I think capitalism can do a better job of creating jobs, middle wages, helping skills, helping get kids jobs, helping lower wages. So one of the reasons I took on the Business Roundtable chairmanship, and we have a great new CEO, is because I think business should play its part in promoting what's good for all Americans. And, including expanding things like the earned income tax credit. And so inclusive capitalism, I agree. Now, most of the big companies, they are socially advanced. They give medical benefits. They train their people. But we could do a better job come up with policies that are better for the communities. That's true, I think, in Europe. It's true in the United States. And it almost can't be done without business. Education. It's important that businesses hire the people.
But do you think it was a trend that was before, or did President Trump actually waken up the animal spirits?
It seems like he's woken up the animal spirits. One of the CEOs came out of one of those meetings and says, we've never had such a pro-business president since the founding fathers. Now, I'm not sure that's true, but consumer confidence, small business confidence, business confidence all skyrocketed. Because it's a growth agenda.
Will it be difficult to implement? And I'm thinking of, if you look at a lot of the indices, a lot of the markets, because we've saw record highs, how much of what is expected is priced in? And if he doesn't deliver, even if he doesn't deliver a tiny bit, are we going to see a correction?
Yeah, so honestly, I don't worry that much about that. So I think stocks went up maybe rationally because of the growth agenda. Now they have to do it. And I think they'll get it done. It's just going to take time. It's going to be a lot of press. You guys are going to have a lot of fun talking about what tax scheme and what infrastructure scheme and how it's all going to work and it's as good as he promised. But if he gets it done, even part of it, it'll be good for growth. good for jobs, good for Americans. So I am fairly confident he'll get that done.
Will he get it right, the regulation for Wall Street banks?
I hope so. We've been trying, I hear people say, we had a crisis, we're going to throw out all Dodd-Frank. No one's asking for that. We want to be a reasoned voice to look at those things inside, not just Dodd-Frank, but regulations that need to be recalibrated, coordinated. There are too many people involved in mortgages. We don't have mortgage rules yet. It's hurting, and this is hurting lower paid, first-time buyers, small business owners. We need to do it for the sake of all people. So, no one, when it was done, could rationally say everything done there was proper, fair, coordinated, consistent. So we're just saying, just open it up, have an intelligent conversation about what's working, what are the side effects of this, what are the unintended consequences, and can we get the economy growing faster? If you don't have a healthy financial system, you are not going to have a healthy economy. And just keep that in mind. It's not, and it's good. They're good for the citizens of the country. It's not good for the financial players. It's good for the citizens of the country. And damaging the financial system is a bad idea if you want jobs and growth.
But Jamie Dimon, you feel that this dialogue with the Trump administration is healthy and actually constructive.
Yes.
So he's actually consulting a lot of CEOs through Gary Cohn or with him directly? Directly
through Gary Cohn, through Steve Mnuchin. The CEOs are part of the dialogue. They should always have been. President Obama spoke to CEOs too. But I think that, again, I'm a firm believer collaboration will win. Finger pointing won't. And so there are solutions to problems. I always say, what do you want the outcome to be? Then how are we going to get there? And I think, if you have civic society, business collaborating together. So I applaud his outreach. I applaud his pro-business. I think some of these businesses are some of the finest institutions on the planet. We really try to take care of our people and our clients. And I remind people, even in the crisis, we didn't need government help. We were trying to help people. And so, I really want to make sure that we do our job helping grow and, helping the economies of the world be better.
I've spoken to a lot of European banking CEOs in the last couple of weeks who are terrified that if Donald Trump deregulates Wall Street too much, you're not in a level playing field anymore with Europe.
Look, I think international cooperation is a good thing. So while there's been criticism about Basel, and I think some are legitimate, I think at the end of the day, when Steve Mnuchin and Gary Cohn get involved, they'll work out things with Basel that make sense for everybody. We don't want a level playing field. It's not unlevel today. Actually, American banks have far more capital and far more liquidity requirements. But the fact is, I want the European banks to thrive. If the European banks don't thrive, Europe will not thrive. And so, to me, the regulators should really look at those things that can help the European banks compete and thrive. To grow their economies. And much more important in Europe than the United States because they finance 70 or 80% of the economy here. In the United States, the banks only finance 25%. The rest is done through the capital markets activities.
So what are the chances of the U.S. ignoring the rest of the regulation in the world? You talked about Basel. Do you think, are you absolutely certain that they will they will reach an agreement?
The U.S. gold-plated Basel, made it harder, added things. And I'm hoping they reduce some of that so that ours is closer to Basel. And I hope that Basel takes a deep breath and make sure that this next round of things, they don't like it being called Basel IV, but that this next round is properly calibrated to both enhance safety and soundness and enhance growth. And they should be looking at both, not just at one.
Which means what? So smarter regulation?
Smarter regulation. So not more or less, just smarter. So like, certain rules, if you look at the United States, I think mortgages would have been $500 billion more had we proper securitization rules, proper legal safe harbors, things like that. People have been very reluctant. A lot of banks have gone out of mortgages. I think in the United States, and the Federal Reserve said it recently, small business formation is lower. First time it's ever been net negative recovery because small businesses tend to generate in a recovery. So net formation is negative for the first time, partially because of credit. A lot of banks, not just big ones, just got out of a whole bunch of small business and certain unintended, and there are always unintended consequences of regulations. Regulators should look at that. So one of the unintended ones, probably out of CCAR, is how hard it is to hold certain small business, certain real estate loans, certain SME loans. And because of that, banks are pulling back to manage their CCAR risk.
How do you rate the European banking system at the moment? Are we going to see more consolidation? We've tried to fix the Italian banks.
Yeah.
I don't know if you think it's successful or not. Deutsche Bank is trying to raise capital. Are we over the worst?
We were that close to fixing Monte dei Paschi. We knew it was hard. I'm so proud of our people for doing it. We could have gotten it done, and I hope it gets done. The banking problems aren't as big as people say. So Monte dei Paschi, I talked about $40 billion of bad loans. No, it was only so much on the balance sheet, so much already been written off. We think $5 or $6 billion of new capital would fix the problem. And so I would like to see the banks, first of all, in the old days, banks were going pan-European. Because of the crisis and new rules, they've kind of been going back to, I think the right way was pan-European, a pan-European regulator. It's better, they're more diversified, it creates more efficiencies in the system. I don't know what the long run is. So I think eventually you'll see mergers and acquisitions among European banks again.
But that has to come from what, CEOs? The problem is that if you make two
I think it's regulators.
weak banks,
I think the regulators have to say what they actually want, whether it's good or not, and then allow it. If they don't allow you to use capital in this country to support capital here, if they don't allow, if anything done cross-border is heavily punished through capital or liquidity requirements, it won't happen. So some of the things we do, anything cross-border is bad. So you want to reduce it, all things being equal. We reduce it substantially. And, it hurts some of the parties. We have no choice. We have to meet the new rules and requirements. So
we're in Paris with Jamie Dimon.
I want to see the European banks thrive. That's what I want to see.
Okay, because this is good for your competition, or again, this just means the stability of this region,
I want it because it's good for the citizens of Europe, including the low-paid ones. I think people don't look at this clearly. This constant being up on banks, and if you have the European banks still deleveraging, they can't finance growth. And so, you're going to have other people come in and do it, but, some of the investors here are buying, quote, bad assets or assets out of European banks, but their job is to help grow the economy.
To all of our viewers across radio and all of our listeners across radio and TV, we are having a conversation with Jamie Dimon, the CEO of JPMorgan. Jamie, talk to me a little bit about Brexit.
Yeah.
You've given us a number of how many job losses you're expecting JPMorgan to have, but also banking in general. Can you update us on that figure?
You guys are obsessed with job losses.
Yeah.
Okay? So let me tell you what's more important. On day one, whenever the exit takes place, JPMorgan has to be able to conduct business with our clients in Europe.
Fair.
That's a sine qua non. Those clients include the governments. They include hospitals, schools, businesses, individuals, etc. And to do that, we have to meet the new laws. And since we know what they are, we're going to have to anticipate some. Then we're going to build up structures. We'll be ready, because at whatever cost, that does not cost anything. It's doing a good job for the client. And we've always been public that we think that initially will be, 0 to 3,000, 4,000, and we just don't know. The other important thing about day one is there's day one, and then there's what happens for the next 10 years. So what happens on day one may be slightly different than what you're going to be asked to do. But remember, the British people are going to decide, and the European, the politicians both are going to decide. We're just simply accommodate it, and they want to ask our opinion about what it does. What no one wants is to disrupt financial markets on day one, so you can't finance companies. That could be devastating.
But what does that mean for people that you're moving? So between 0 and 3,000, are you saying the first 100 I send ahead of even triggering Article 50?
It might be people hired locally. We don't know exactly yet, and how much we have to do, and what we're going to be required to do. So we're just guessing still at this point.
But is it a phase out? Is it kind of step by step?
We're just guessing at this point. The only thing I know for sure is that on day one we have to be able to conduct business in Europe, and we need some different legal entities and regulatory requirements and certain expertise. Certainly will be hired locally.
Are you speaking to other CEOs to look at this together, or is each bank just going at it alone?
We talk to each other, yeah. We get good insights from each other and how we're trying to handle it. And I think the clustering of financials in London is hugely efficient for all of Europe. Now you're going to have a declustering, which creates huge duplicative costs, which is expensive to clients. So, but we have no choice. That's what we got to do, and we're going to try to figure out the best way to do it, both for the client, the short run, and the long run. So.
What are the chances that Theresa May's government preserves the financial sector for London?
I really don't know. Remember, it's not up to just her. She has to negotiate with 27 other people. Each of them effectively has a veto. And no one wants to see disruption. Some politicians always think they want to punish Britain. Others are much more rational and thoughtful about how you want to go about it and have a good relationship with Britain. So I just don't know. Again, as the CEO of this company, I have to prepare for the contingencies. If any one of you other viewers were on my board of directors, you would say, you may think A, B, or C. I want you to be prepared for A, B, and C. That's a slightly different way of how we have to look at it.
Where do you think people will move to?
I don't know yet.
Do you have people coming to you and pitching?
You guys have mentioned all the major cities. Yeah. We're going to look at all and talk to people and try to figure out all things being equal. And eventually we'll be looking in much more detail at local cities. What
will Europe look like in 5 years? Do you spend a lot of time, and you were talking about the strength of the financial system, which is necessity for, stability in this region. Yeah. Is the euro going to implode?
So Europe, look, I've always said that the European Union is one of the great achievements of mankind ever. To have 28 nations live in peace and hold hand and make political decisions and, not wars and having a common market is also very smart. And it kind of got bogged down a little bit. The British obviously thought it was too much, and there are issues that have to be dealt with. But when you talk to the politicians, they're devoted to keeping together. They're devoted to moving forward. I wish there should be a little more devotion to looking at what the problems are that are creating some of these concerns among the populations of the country. Like, you can have a vote in France soon. So, the worst case is that someone major decides to leave the monetary union at one point, and that's hugely disruptive. Now, there's no one who says we're going to do that. There are some people running who are saying they're going to do it. So, that's the other fear. You got to see what the politics of the situation is.
Okay, but are these votes of protest, and how do politicians reconnect with the people that are electing them?
Yeah, I think so, and I think there's a legitimate, if you ask, I think it's true in Europe, it's true in the United States, middle-class incomes have not gone up, low wages have not gone up, we haven't created enough jobs, there's too much unemployment in young men in Europe. And meanwhile, they saw us fight wars, they saw us waste money, they saw us do all these things. And they're saying, wait a second, let's help the average people of our country. So it's true. Right. But the way you're going to do the next part is, how do you do that?
Right.
Right.
Which I was going to ask you.
Good tax policy.
Right.
Good training, skills, schools.
Redistribution of wealth?
Yeah, I think there should be some, yeah. But we in the United States, there's a thing called the earned income tax credit, where if you earn $7 an hour and you're a single mother with children, the government will pay you $3. Your wages go from $15,000 a year to $21,000. Most of us already pay that. So the big companies are already way above that in general. But that would help jobs, dignity. Studies show that people get jobs, they like to work. And remember, it's the first, unlike what the liberals think, it's the first rung in the ladder where they usually moves on. It's good for social values because it allows you to form a household and have children and buy a car to get to work. And it's good for small business. So that is great for society. And so I think we have to come up with examples that actually fix the problems. Skills training is another one, which Germany does great, and the rest of us don't.
One last question. Would you ever go into politics?
No, I don't think so, no.
Why?
I don't think I'm suited to politics. It's too late. I'm 61 years old. I love my company. I think I could do a lot to help America from the platform I have today.